All right, guys. This is my first YouTube video, so we'll see how it goes. I've probably done it like 100 times already, trying to figure out how everything's working and what I want to say. But we're going to give it a go. I'm going to try and make this the one that we use. Let me just switch over real quick here to my screen. Here we go. So what are we going to learn in today's video? We're going to cover Mara, a Bitcoin miner. I might jump into some others, but I'm probably just going to focus on this for simplicity's sake. We're going to talk about how I figure out price targets for different investments like Mara. We're going to talk about the options calculator I use to be able to determine how much money I can make, how much I can lose. We're going to talk about options chains. I've got to get Bar Chart gave me a login to theirs, and I know they've got their new stuff. I need to look at it. I haven't done that yet, so I'm just going with what I know. They're a great company, though. If you guys don't follow them, I definitely would recommend it. But yeah, we're going to go through all of this and explain why we use it. So first off and foremost, I am going to pull up Mara here, and I want to show you there is one thing that drives me nuts that I find a lot of technical people doing. They don't use trend-based fib extensions. And so I'm going to show you what that is real quick, because you need to use the right tools at the right time. There is something called the fib retracement. Everybody uses this one. That's great if you're trying to find a bottom. We think we found one already. And for Mara and Bitcoin, right? We think that's already come and pass and that we're in the bull market. We have a pretty good probability that that's the case. So we're not using a fib retracement where you draw from the bottom of the last major down cycle. And again, cycles in Bitcoin are really easy. They're 4 years. You kind of know where the tops and the bottoms are. So this is an easy one to draw. Fib retracement would be drawing down here in March 2020 up to here in November of 2021 where we peaked. Then you could see how far you're likely to drop, and you can use that fib retracement levels. That's not what we want, though. We want to know where are we going. So we use something else. If you pull up TradingView here, it's called trend-based fib extensions. So similar concept. We draw from the bottom left up to the peak, down to what we believe the bottom to be, and then that will show us different levels of support and resistance, along with one of my favorite tools, the VRVP, the volume profile over here in yellow and blue. And between those tools, you can really figure out where price levels are. So that's what we're looking at first. And secondly, we're going to jump over for a second here. We're going to jump over to the options chain. This is just NASDAQ.com pulling up Mara. I am looking. So you'll see January 2026 contracts. I'm not looking at those. I think that those are all going to lose money. The reason I think that is if we pull up one of my charts over here, this shows every halving cycle. The vertical blue line is the halving cycle. You could see how long each of these cycles were from the halving to the peak. They're getting longer, but they're not long enough for me to feel confident that January of 2026 is a good option. And you don't want to overshoot. It's the worst possible thing, because when these miners, when their options contracts bleed out, they bleed, as some of you have probably figured out recently. So look at here, first cycle, first halving, I should say, heading into the second epoch, 364 days. Next one, next halving, second halving, third epoch, 525. Third halving, fourth epoch. Where does this one go? 553 days. So if we do this again, you'll see that in 2017, we peaked in December. In 2021, we peaked at the end of November. I mean, really, almost in April. We got neutered on that one. And I will argue all day that the reason that one stopped where it did is because of what the Fed was talking about doing, the quick reversal on raising rates, just what was happening with the global macro. It chopped the top off of Bitcoin because global liquidity was contracting. So that's why that was such a short, tiny rally. But again, we don't want to overshoot. So if I jump out, if I just make the assumption that we're out 581 days, that gets me to November 25th. So I don't want a January 2026 call if we go back over here. I don't want that. And I don't want a December 2025 call either, because again, we might not, like, it might be over by this time, especially if you talk about the Bitcoin ETF. and the fact that we have a whole new form of inflows coming from boomers that we didn't have before with their retirement accounts, where they can work with companies like BlackRock, companies they trust, to be able to put an allocation towards Bitcoin. GBTC, when it was an over-the-counter OTC trade, sucked for people like this that didn't want to deal with this stuff. It's too experimental. They didn't want to touch it. With ETFs, they're coming in. You could see this in the inflows already. So again, we think that this could be more violent to the upside. Also, the transaction fees are at record levels. They're higher than they've ever been at this point in the cycle. And really, we've run so hard already. You could just see a lot of power behind this run. So with power, to me, makes me think that we might have a blow off top sooner than later. And maybe we have another one. Like Bitcoin's known for, 20, 30% drops, albeit this cycle, we haven't really had anything close to a 30% drop since we started going up. It's been pretty much up. But anyway, I digress. So no December 2025, no January 2026, because we're not here to lose money. So the next thing in line is January 2025. So that's what we're going to focus on. Just calls, out of the money. The reason we're doing out of the money is because that's how you make money. And again, this is an asymmetric return asset. And Bitcoin miners are going to return a multiple of Bitcoin. I've heard some people say that, because there's ETFs out nowadays, that people aren't going to be in Bitcoin miners as much and the returns aren't going to be as great. That is stupid. The people that are telling you that do not know what the fuck they're talking about. You should not listen to them. Bitcoin miners are just like gold miners, just like any precious metal, rare earth, whatever miner. You take on additional risk by investing in them, so they give you an additional multiple. Also, they're smaller caps than the underlying asset. So you're going to get a multiple of return. Bitcoin miners, from my experience, can do 2 to 4x. They were hitting 5x recently versus what Bitcoin was doing. It was stupid up until a month ago. So these will give you a multiple of return. And we could see Bitcoin, even in a year from now, doubling. So when we're setting strikes, we're thinking about this price targets. I'm going to jump back over here from our options chain back over to here on the Mara chart. We're going to talk about where I think we're going to hit. I would say it's pretty safe bet in the next year that we get to the 52-week high here at $31. That's kind of a no-brainer and stupid. So we're going to say that's happening. I'd say there's a really good chance that if Bitcoin even comes close to doubling, that Mara is going up 147%. So I'm putting the floor on my target at $47, the 0.5 fib extension. I think that's the floor for this. Now I'm putting the ceiling, and again, it could go higher than this, but I'm trying to be conservative. The ceiling at the 0.618. This is the golden retracement zone. This is where you're more likely to drop. It's just the way it works. That Fibonacci is beautiful. It's in everything. It's in seashells. It's in everything you can possibly think of. Fibonacci sequence exists, and there's rules to it that apply that are mysterious to us, and we don't always understand, but they're real. So again, my range is the 0.5 to the 0.618, so 47 to 89. Now, I want to go back over to the options chain and look at this. And the reason we're looking at this is because we need to figure out, okay, we said what, 47 to 89. This thing only goes up to 45. Which one do we choose for the strike? Now, this is important. You want to look at chains that have open interest and volume. If you're not doing this, you could fuck yourself later, even if you hit your target. Because like here, volume 9, interest 249. That'll probably pick up the closer we get to the strike. But maybe this is like has a fourth or a fifth the volume of these other chains. If you're in that and a bunch of people are selling and you're trying to sell too, you might not find a buyer at the price you're looking for. You might end up having to drop your option way lower and get a fraction of the return that you thought you were getting because you were stupid and you didn't take 2 minutes to look and see which ones do people care about. It's pretty easy to see on here. $30, huge volume. 35, 40. I'd probably stop there. I wouldn't even go down to the 45. I would stop here. And so again, we said what? 47 was our minimum. So let's do 40. Let's just look at that and see what it looks like. This is again going to be a pretty easy one to hit. So let's go over now and look at our calculator. I'll go to the top. I'm keeping this really, you don't need to know what an iron condor or a strangle synthetic put. Ignore a lot of these things. If you get more sophisticated, you can look at them. But for now, we're doing a long call. Also, if you're starting with options and you don't know what the fuck you're doing, you don't know how they work, don't put a bunch of money into this. Be smart, start small, learn. When you're learning, do it with small amounts of money. Don't do it with a lot. You do that and you're just begging for pain. Anyway, so we did the long call bullish. The symbol's Mara. I hit get price. Takes a while. Are we coming? Oh, wow. Really taking a while. Okay, there we go. And now we're looking for the contracts. We go over here. Remember, January 2026 sucks. December 2025, scary. January 2025, probably safe. All right, so that's a year out from now. A year and 2 days. So we got 367 days. That's a decent amount of time. Which one did we want to look at again? Let's go back over here. Oh, yeah, that's 6,361. That's a lot of interest. We like that. Good volumes. It's close to our target. Let's pick it. So I'm going to kind of look at what I would look at for a starter pack here. So I like to spend probably more money than some of you guys. So I'm going to choose 50 here just to start. $22,000. Nice, decent amount. I'm going to do calculate down here. And the reason I'm doing that is it's going to show you what the theta can look like and what the potential rewards are. But it's not doing something I want to do, right? I told you that 47 to 89, it doesn't show 47 to 89. So let's keep it at 18, but let's put that 89 in. Wow, a lot more green. We like that. So let's just look in here and say, okay, so if it got to $47, again, that first kind of strike, that we're looking at, let's say it did that by September, by fall. If the underlying asset, in this case, Mara, of the underlying asset, Bitcoin, if Mara goes up 168% in that time, we make almost 300%. So we make $62,800 off of 21,900. That's pretty cool. That's pretty cool, right? We're doubling. Well, I shouldn't say doubling. We're getting like a 70% extra return, something like that off of this. But that's our low target. We actually think it's going to fall between this range up to 89. So let's look at some of that and see what it looks like. If we're right, if Bitcoin doubles, I think this happens. So let's say it gets to that midway target. Let's say $67. So if Mara goes up 262% to 67.50 and it's November, I would make 580% off of this. So $127,100. Again, 22,000 down, total value $149,000. That's a heck of a return for 1 year. Now, if Mara for some reason got stupid and overshot this and went higher, I don't think it'll happen. But if it did, let's just show what some of those numbers look like. Right now, again, we're at 1860. So let's say that Mara goes up, I don't know, 450%. The numbers get stupid. We're well in the money at this point. Off of $22,000, we would have 321. That's if it gets like that's nuts. So again, this is kind of cool. Now, the important thing to note is that if for some reason Mara falls apart as a company, you lose it all. That's probably not going to happen. Or if they did fall apart as a company, you'd probably lose it all anyway, or at least 60, 70%. But the thing that is so cool about this type of investment is we're looking for 1 year, small amount of money, or at least to me, the $20,000. So I'm not putting a lot in. Whatever your amount is, just put in the contract for you. Also, contracts. This is probably an important note I should touch on for people that don't know this. Each contract entitles you to 100 shares. I rarely wait to expiration to buy them. I just don't care. I usually sell these things way before that. I like to get that quick multiple. So if this is a 2 to 3x multiple of Bitcoin and I get 2 to 3x off of it, I make a lot of money. So that's again my goal. That's what I'm focused on. So if Bitcoin doubles, we think that this thing will go up at least 200 to 300%. And if it does that, we make 300 to 700%. It's beautiful math. So anyway, this is I think I covered it as far as the contracts. I showed you option chains, talking about open interest and volume. I told you how we got this strike, what I'm looking at for my range over the next year, right up here, basically a new all-time high, even with dilution and everything that's going on. I think Mara is a beast. It is definitely the top tier right now of the miners, even though they do have some equipment that will need to get upgraded. They have a massive Bitcoin stack. So there's a lot of positives with this thing. But I think this is what we're looking at. I will put these links to the chart, to the calculator, to the option chain, excuse me. I will put all that stuff in the YouTube video. So take a look at it. Excuse me. If there's any questions you have, hit me up. Let me know anything that should have been done better. I'm trying to get just beginning to end soup to nuts. Presentation is like the least of my concerns. I just want to make a video that's informative. But if you guys have any advice, love that too. So give it to me. Otherwise, have a great day. Bye.